We go now with PFRS 6, wasting assets, but normally PFRS 6 is known as your expiration for and evaluation of assets. So we call it E and E assets, but in layman's term, we call it wasting assets. So what is the expiration for and evaluation asset? So expiration for and evaluation asset are the search for mineral resources, including minerals, oils, natural gas, and similar non-regenerative resources after the entity has obtained legal rights to explore in a specific area, as well as the determination of the technical feasibility and commercial viability of extracting the mineral resource. So generally, this particular standard applies to your mining companies. So, of course, first we should have a legal right coming from the government to explore a particular area. Okay? So this land will not be accounted under PPE, but it will be accounted under wasting asset. So when can we consider that particular land as part of PPE and when is it wasting asset? It's part of PPE if in case you will not search for mineral resources. But if this land is for searching of mineral resources, then we call it wasting asset. So this particular standard applies only for this particular type of business, which is mining. Why is it called wasting asset? Because you need to remove some items out of that particular property. So we try to waste that asset until we get the mineral resources. So for wasting asset, of course, we need to recognize that particular wasting asset. We need to learn the recognition and also the measurement of that wasting asset. So wasting asset. A wasting asset is a natural resource properties which is in the form of land, as we said, which contain minerals, precious stones, and metals, or trees to be harvested as logs and lumber with limited life and will be subject to depletion using the production method. So generally in wasting asset, we first recognize it and we should look into our initial measurement. Then we will deplete it. Remember, the allocation under PFRS 6 is known as depletion, and the remainder is for your carrying amount. Okay? So that's why we need to learn this wasting asset. After recognition and initial measurement, we should learn how to deplete and look into the carrying amount of your wasting asset. So for its initial measurement of your wasting asset, it's very easy to recognize the wasting asset, guys. Once you have a land and the purpose of that land is for your mineral resources or for getting of mineral resources, wasting asset na siya. So how do we initially measure it? So what is the cost of your wasting asset? First, your acquisition cost, of course, your cost to acquire that particular land. Next, exploration cost, the cost to explore that land to get your mineral resources. Next, development cost, the cost to develop that land. Because guys, hindi naman porke meron ng lupa, bungkalin mo na lang agad yan. If you have seen already mining properties, they will create different routes inside that mining property. They will install items there. They will install machines inside that particular mining property. So those installations, those developments are called development costs. And lastly, restoration costs. If you still remember restoration costs, we have discussed this in your property, plant, and equipment, such that we call this one your initial dismantling cost. However, for wasting asset, we call it your restoration cost. Your restoration cost is considered a future cost, meaning you will incur it in the future. Because under the law, after you make use of a property for a wasting asset or for mining, you should restore them. Kasi hindi naman pwede, okay, in the surface, ayan yung lupa. Pero sa loob niyan, may mga daanan siya, may mga tunnel siya, hindi pwedeng habang buhay na lang na ganyan-ganyan yan, na may yung mga daanan diyan ganyan lang, hindi siya mapupunan. Kasi there is a possibility that it will erode. So what should they do? They should restore the property in a way that they can still make use of that particular property. So here is the property. So Yan yung mga tunnel tunnels, aayusin nila uli yan in a way that we can still make use of that particular land area. That particular cost to restore the property is known as future restoration cost. Since this is a future cost, what do we know about future cost? We need to get the present value. So how do we initially measure the acquisition cost of the land? Any cost to explore the property, any cost to develop the property so that we can, of course, extract the mineral resources. And lastly, any cost to restore the property in the future. The cost of restoration is the same with your dismantling cost in your property, plant, and equipment, wherein we get the present value. Now we go with your depletion. So depletion, as we all know, the allocation under your PPE past 16 is known as depreciation. A while back, past 38, we know it as amortization. And now we have PFRS 6, we call it depletion. So what is depletion? Depletion is the depreciation of natural resources. So as we get the natural resources or as we extract the natural resources into the land, we recognize a depletion. So in depletion, we get for the total cost, and out of your total cost, we divide it to your total uh, expected mineral to be removed out of that particular property. So this is more of an activity method. Okay, so your total cost divided by your total expected mineral to be extracted out of that property. That's how we compute for your depletion, multiplied by your actual extracted. Okay, so in your depletion, what is the depreciable base? Your cost less residual value. What is the item of your cost again? So first, acquisition cost, exploration cost, development cost, plus your restoration cost, less residual value. Your useful life, your quantity of resource. As we said, this is your expected mineral to be extracted. What is your depletion method? We use your activity method. And what particular activity method? We call it your units of production. How do we compute for your units of production method? Under your units of production method, first, we get for your depreciable base, we divide that to your quantity of resource, you multiply it to your actual resource that had been extracted. Okay? Depletion method will start at the time a natural resource is extracted. It will end upon the consummation or the recognition of the particular property. So when we say consummation, wala nang matatanggal doon or wala nang ma-extract na natural resource kasi natanggal na lahat. When we say the recognition, you will already remove that particular land in your assets. So your wasting assets will now be either transferred or your wasting asset will already be recognized for sale. Okay? So depreciable base, cost less residual value, cost, again, acquisition, exploration, development, and restoration. Useful life, it's a quantity of resource that is the total minerals to be extracted out of that property. Depletion method, activity method, known as your units of production method. So depreciable base over quantity of resource multiplied by actual resource that is extracted. Depletion method will start when there is an extraction of natural resource. It will end if all the natural resources are already extracted or consumed, or if the property is derecognized. So how do we account for your depletion? Depletion on resources extracted during an accounting period is allocated between inventory and cost of goods sold. So for your depletion, we please based on your inventory and based on your cost of goods sold. Inventory, if ever it is unsold. Cost of goods sold if sold. Sir, why is it not considered depletion expense? Because guys, here remember what is depleted is a mineral resource. So that mineral resource will still be sold. If it will be sold, COGS, if not inventory. That's why it is placed to work in process. So remember, your wasting asset is composed of the four items: acquisition, exploration, restoration, and your development. You deduct your accumulated depletion. You deduct your accumulated depletion. But your depletion expense is not actually an expense because you allocate it to work in process in case it is unsold, and to cost of goods sold if ever it is already sold. Remember that one. It is not purely an expense you place to work in process because that is considered a mineral resource. And normally a mineral resource, they will still process it, right? But if it's already sold at its raw form, so whatever is the raw form of that particular resource that was extracted, if it's sold, we place it to your cost of goods sold. Remember that, okay? Depletion, not pure expense. It is considered an inventory, work in process for the mineral resource. And whatever is the sold item out of your mineral resource is placed to cost of goods sold. Change in estimates, take note, prospectively. This is the same. Under past 16, if there is a change in estimate, what did we say? Prospectively. Past 38, change in estimate, prospectively. PFRS 6, change in estimate is still prospectively. What estimates? Either the useful life or the quantity of resource or those items only because the depreciation method will still remain. So ang magbabago lang pala dito sa PFRS 6 is the useful life and quantity of resource. Unlike in past 16, tatlo. The useful life, including the salvage value, okay? Salvage value, the useful life, and the depreciation method. Dito, the useful life and the quantity of resource. Okay? Sometimes the salvage value. Next, depreciation of PPE used in E&E. So what if there is a property, plant, and equipment that is used in the exploration for an evaluation of asset? So that is either a particular machinery that is used in the exploration or in mining industry. So if that PPE is movable, meaning it has a future use. You depreciate it over the life. But if that is immovable, meaning it is attached to that particular property or to that particular land or mining property, it has no future use. Therefore, we use your unit of production method. But if the life of the asset is shorter, we use the life of the asset. In case it is immovable, meaning it is attached permanently to the property. Okay, unit of production, if the life of the asset is longer, if the life of the asset is shorter, life of the asset. And depreciation using during the shutdown, if there is a property, plant, and equipment that is used during the expiration, we will not cease depreciation. So depreciation shall not cease. It will continue using straight line. So in short, if you shut down, or when do we say there is a shutdown? If you will discontinue for a particular period of time the exploration. So for example, for 6 months, hindi ka muna magmimina. So during that 6 months, we have a shutdown. How do we recognize the depreciation on the property, plant, and equipment? So we get the book value before the shutdown and we divide it to your remaining life. So we use your straight line method. Okay? So just take note, depreciation shall not cease during shutdown. Lastly, liquidating dividends. So normally, as a rule, uh, you can only provide dividends not up to the amount of your legal capital. But we have this wasting asset doctrine. Under this doctrine, the wasting asset corporation, which is a corporation that is undermining or engaged in extraction, can legally return capital to stockholders during the lifetime of the corporation. Okay, as a general rule, the legal capital cannot be returned. Exception, wasting asset. Okay? So the wasting asset corporation can pay dividend not only the extent of retained earnings but also to your accumulated depletion. Because guys, you know that shareholders' equity is composed of contributed capital and your retained earnings or earned capital. Normally, dividends should only come from your retained earnings. But but in your wasting asset doctrine, you can also get your dividends out of your capital. Okay? So you can legally return the capital to stockholders under wasting asset doctrine. And how do we compute for that? Retained earnings beginning, you add any accumulated depletion, you deduct any capital liquidated. So this is a previous year or previous capital liquidated, less your depletion in ending inventory. That is your maximum dividend. Don't worry, you will not have any computation. I just want you to remember the wasting asset doctrine that you can provide for liquidating dividends. So to compute for liquidating dividends, we use this formula. You do not need to memorize this, okay? But you can remember that in a liquidating dividend, you can include the accumulated depletion. Sabi nga natin kanina, in a wasting asset corporation, you can pay dividend not only to the retained earnings but also to your accumulated depletion. Kaya nga dinadagdag natin dito yung accumulated depletion. Okay? So that's it for PFRS 6 wasting assets.